think we'll be recording in a sec. Here we go. We're live. And we're talking about inflation and things coming online as far as quarantine starting to ease a bit and us all jumping back into normal day-to-day life and travel. We can kind of imagine that things are probably going to start to get more expensive.
Yeah.
You might see things run in.
Well, I think so. And I was just saying, Joachim, that the reason that inflation will occur quite quickly, I think, when things do come online is because firstly, people will be able to say that they've got to make up for the lost finances of those lost years, 2020, 2021. And I think people will just go, oh, yeah, well, that's fair enough. They've put their prices up a bit. The second reason will be that people want to, because of demand. So demand will be outstripping supply anyway. So therefore, people will, the prices will increase naturally. And thirdly, I think the governments won't mind, because the more people are paying, the more money that's moving around, the more they can claim in taxation, which they're desperate for anyway. And so I don't think they'll put the brakes on it. But that could be, some of the reasons why we're going to see this inflation hit us, as well as all that additional printing that has gone on in America and elsewhere.
Yeah, it's going to go wild. I mean, it'll be very interesting to see, but certainly a polar opposite, because it was this time last year where we had huge deflation and everything just plummeted as everyone there was a liquidity squeeze and everyone needed to get hold of the dollar. And the immediate response from central banks was to, print as much money as possible and try and inject liquidity into the system. And they managed to successfully completely re-inflate the bubble. But actually, inflation could be looked at like a ketchup bottle, and that you keep hitting it and then suddenly it all splurts out. And that's kind of what's happened, right? As far as, if you look at the charts of Bitcoin, you look at the charts of the stock market and how everything's going, it is just running away in inflation. And you might get these big drop backs, but it'll only spur a response from central banks to do the same thing, where they need to just pile money back into the system. And 1.9 trillion, I think the checks are going out next week, or at least this month. And you're going to start to see people getting all this money, new money coming into their accounts, which they're going to start spending. So that time,
there's an additional 1.9 trillion US dollars that Biden has sanctioned, because it adds on to an initial there was about a 4 trillion plus a 2 trillion. So, we're looking at, I think it's nearer $7.5 trillion that's been printed. I mean, it's just extraordinary, the amount of money in supply.
So do I understand it correctly? So on one hand, Chris, you say that people are going to start spending more, which usually is quite good for the economy.
Well, they're being able to save up a lot. So those people that were in debt have paid off a lot of debt over the past year. So debt is down across most countries, not from the central banks, but from individuals. And they've been saving up to spend it. So there's going to be a spending splurge as soon as they, realize that they can.
Yeah, but that won't lead to inflation then, right? So that's by default a good thing. Well, depends on what they spend it on, because I think that a lot of people, particularly over there in the UK, people are already starting to book their tickets to Spain, and so for certain economies, especially here in Europe, that's going to be quite good. You got those, you're vaccinated, so you feel good enough again to start traveling. But
I mean, that's why I was talking about why prices will probably go up,
but not for everything, right? So for in the travel industry, probably prices will go up again. Let's hope, because there are whole nations that depend on it. But at the same time, what Sasha's saying is quite then the opposite, right? Because you're talking about money being added into the economy, and that can never be a good thing for the economy on the long run.
Because with more money, it devalues every dollar, every euro that you currently have.
Yeah, I mean, inflation in theory is the goods and services going up in price, as deflation is the pound or your dollar getting stronger, so goods and services going down. And so we've got not only goods and services going up in price because new money is being injected into the system, but we're also all in lockdown, and we're about to now suddenly go back to, or at least start to come back online almost, and all this new money is going to be chasing supply, which is probably limited, and it will only make it then go up higher. But again, this is just us debating,
speculating.
Completely wrong. But look, my thoughts are very much that we probably are going to see a lot of demand,
outstrip supply.
limited supply, and lots of money that just ramps it up even more because it's chasing limited supply.
But are we talking about the limited supply in Bitcoin, in crypto, or in what kind of areas?
Just
real
goods
world
and services generally, I think.
Yeah, like anything from medical to holiday and travel to going out and buying goods and shopping.
Just going to the dentist or the hairdressers. I mean, I think that the things that you've been stopped doing, there'll be a sudden surge of demand, and that's why those people who are providing those services can increase their prices. So because the demand will outstrip supply, so therefore they'll say, well, if you pay me an extra £5, then $5, whatever it is, then you can book this now. But also they can legitimately say that they're doing it because of that increased demand, and also they're trying to make up for the lost years. Plus, the government won't mind because they're going to be paying more capital gains tax or income tax or whatever it is. So they're going to be getting more money back in. So actually, I think the reins will be loosened, and actually that's where we're going to start to see this extraordinary momentum. And why so many people now are buying into Bitcoin, because they're hedging against that inflation.
So we've always said that we expect another economic downturn. But actually, with COVID, well, the end might be on the horizon within the next 2 years, give or take, year and a half. So actually, we're going to expect the opposite of what we've been talking about before.
It's in my opinion, the direction that I would say on a macro perspective we're heading is a inflationary depression. So we always think of depressions as, everything crashing and coming down. And whilst that's very much still on the cards, because the only thing that's stopping it from coming down is manipulation, which is central banks injecting money into the system to stop deflation. I'd argue because the capitalism we have today is no longer a free market, in that we have this manipulation of debt being put into the system to help reinflate everything, there's only so far you can go until then it starts to run away into an inflationary depression, where things just start suddenly uncontrollably rising and we start to head towards hyperinflation, which is a word people don't like to use, but actually I'd argue that globally across the board, companies or countries are all in competition printing, because they all need to pay and service their debts and their trade in the dollar, which is the kind of global currency of today. So there's a need to get hold of the dollar, and the best way you can get hold of the dollar is by devaluing your currency quickly, so you can then quickly buy some more dollar. But then that means everyone's doing that around the world to get hold of this dollar. And whilst all currencies and the dollar is also losing value, so everything's going down, I'd argue other countries are going down much faster in their devaluation than the dollar. And what we're going to see is then just goods and services become more expensive as countries are all devaluing as fast as possible to make their debts smaller and smaller, but ironically taking on more debt, which they then have to print more money to make that smaller. And it's just like a machine that's just tumbling out of control. And in theory, it would end with a massive deflationary crash. But what we're seeing is actually money moving into Bitcoin. And Bitcoin, in a way, is like if you stopped denominating everything you see in dollars or in fiat money and saying, well, everything's getting more expensive. Actually, if you hold the Bitcoin, everything's getting cheaper. So it is almost a deflationary environment if you're holding Bitcoin, but it's an inflationary environment if you're holding fiat. So it's whatever you denominate in, but certainly Bitcoin is kind of somewhat of the saving grace, because we want to live in a world where goods and services get cheaper over time. We've been taught that inflation is good, and it did work.
Yeah, and it should be at 2%, and that's the lovely figure.
Yeah.
But as many have written, technology is deflationary. So so we know that for what you can buy now with your dollar or pound or euro in terms of your television or camera or fridge or whatever is much greater, and the computing power is much greater for every dollar that you spend, and the technology is running at a faster rate of increase than the decline in its cost. So actually you're getting more and more for your money. So we've got, on the one hand, this deflationary pressure of technology, and then on the other hand, the inflationary pressure of more and more money. And
well, yeah, it's crazy. Two fighting forces. Something that's making everything more efficient and cheaper over time, and then another system which is making everything more expensive. So you've essentially got things like AI, robotics, and automation becoming more and more sophisticated, and ultimately are going to start taking people's jobs. But then you're living in a world where everything's getting more and more expensive. So it's a really horrible situation to be in. And actually, this is where what you result in as a causing too much inflation is the people who hold assets, who hold stocks, who hold crypto, who hold houses. They are becoming increasingly richer, and the people who hold money, which is pretty much the majority of people out there who work really hard to save up money, they keep that in their bank account and then they spend it, and that's just getting taken away from them because the inflation is just weakening what they hold. You then get more and more inequality, and actually last year we saw the starting of all the riots going on, and I do think if we carry on in this route of printing money and creating this inflationary environment, you're going to see more rioting, and you're going to see it probably spin out of control. And it just comes down to the haves and the have-nots, and there's more have-nots today than there are haves, and it eventually spills out onto the streets.
Yeah, I think you're right, Sash. I think the seeds for that unrest are very firmly set now. And then when you add on to that the climate change issues as well that are going to affect everybody, suddenly there are all sorts of pressures that are going to come together in this all calamitous catastrophe that I think we've got to start thinking about, because it's just around the corner. And there are people that are thinking about it, of course, but actually I think we need to now act rather than just think, and do something differently. But Bitcoin solves all this, right?
Well, yes, it slows it down.
It
definitely slows it down. And technology is deflationary, so it gets more and more powerful over time. And cryptocurrencies and blockchain is deflationary as a new technology, and it's just going to get more and more powerful too. So I do think for our parents' generation and grandparents, it worked in an inflationary environment because they could buy a house really cheap and they could pay off their debts, and their debts got smaller over time as they paid it off. And here they are today sitting on assets which are worth a lot of money. But the problem is that for the younger generation, from the millennials kind of under, they can't afford houses anymore. They're too expensive. We're kind of at the end of this inflationary cycle, and the next cycle is actually going to be deflationary, where everything flips on its head. And you see this with blockchain. It's the whole way you think of blockchain is it's everything flipped on its head. And the future, if you hold it on cryptocurrencies, especially Bitcoin, the reason what makes them so prominent is the fact that they have scarcity. There's only 21 million Bitcoin, meaning it gets more and more powerful over time as the demand chases limited supply. And actually in that environment, if you bought Bitcoin today, you're incentivized to hold it for tomorrow, because you know that, okay, I could use my Bitcoin to buy a house right now, but if I saved it for tomorrow, I could buy a nicer house, or I could buy nicer things, because everything's getting cheaper against it. And it's kind of like a train that anyone can jump on. And in theory, as time goes on, it will get more powerful. £5 in the 50s bought you a lot more than it does today. And I think if we bought £5 of Bitcoin today, in 70 years time, that £5 of Bitcoin will buy you a lot more then, as opposed to less.
Yeah, I think that's very well elaborated. I think it's really interesting. So the safest investment, and we all know that for years, would then have been Bitcoin, right? Well, at least the safest crypto investment. And Sa's question to you, what would be the other coins that you would say, well, these are solid enough at the moment, these are deflationary? What are the top 5 ones that could, at one point have a similar kind of value as Bitcoin, in the sense that they are deflationary and that they will be worth more compared to the dollar?
Ooh, I mean, it's a tricky one, actually. I mean, there's so many coins out there, and you could say that there's having a deflationary coin, but you could also look at cryptocurrencies as an opportunity to own a share of a network. So you might not necessarily have to have an deflationary environment, but you could say that this network effect of what's being built over here is so powerful that me owning a portion of that has a lot of value too. But obviously, I'm going to say Elastos and ELA, primarily because I've been so heavily in it, and I think It's we as a council made changes, so you have to factor in uncirculating supply. So what's not on the current what's not in the supply today that's traded between people around the world, and what's sitting on the sidelines. And that will ultimately, it's almost like a central bank, which is devaluing the cryptocurrency. So for Elastos, there's very little uncirculating supply. So you can kind of be assured that it's not going to get weakened over time. As I look at other cryptocurrencies, and some have only 10%, for instance, in the circulating supply, and then the other 90 is just held by a team on the sidelines, and they're going to be selling it on to raise funds to do what they need to do, but it's at the expense of the holder, in the same way money would be today at the person who saves money in central banks. And then the other thing would be actually making sure that the currency is deflationary, in that it's scarce and there's only a total amount that will ever be produced. I think that's, for me, with ELA, a massive bonus. There's only going to be 28 million ELA, 28.2 million ELA by 2105. And actually that is, you just know that as time goes on, so long as the technology gets more powerful and the smart web and all the blockchain tools and everything that's coming into fruition, that the token is scarce. So there's going to be more demand for the actual technology, and it's going to be chasing a limited supply of ELA. That to me is like, okay, I'm happy. As a 10-year investment, I'm happy to hold that and see how it goes as time goes on. And I think with all these projects, they're so young, they're all such experiments as well, that there's going to be a lot of failure and there's going to be a lot of success. So diversify, have a good pickings of things you like and research projects that you're into, and then get behind it.
I think those are really good points, Sash. I think Ethereum isn't that becoming, if not deflationary, at least kind of a neutral, kind of neither inflationary nor deflationary.
Yeah, they're setting up a system where they burn every transaction that takes place. They burn a bit of Ethereum. So right now, if the network gets clogged, everything becomes really expensive, because they haven't solved the trilemma issue themselves, and security, scalability, and decentralization. They have decentralization and security pretty well, but they don't have scalability. So everything becomes so expensive when more people use the platform. And it just sucks if suddenly something goes on in the system and everyone needs to sell or needs to do whatever, it clogs up. And actually now they're introducing a system where when it does clog up and it becomes really used, it just burns Ethereum for each transaction. So now there's a bit of an evening out system. But I don't think it's got a total supply, though. It's not fully inflationary.
But you're right about the coins. I don't think most people understand the whole market cap issue at all, and what it actually means. And they're not really looking at supply. I mean, I think people, certainly the new people to crypto, tend to have this idea that if they buy a lot of coins because they're cheap, it's better off than buying the same amount in fiat, but relatively less in crypto terms. So, I'll buy 10,000 Satoshis as opposed to a whole load of Tron or whatever the current cheapest. I mean, Tron is probably a bad example now, but I'll buy a million coins of something, or 100,000 coins of something, just because it looks cheap. But there could be 10 billion in the supply, and that they just haven't released them yet. So they just
thinking of it as if it's going to go to the same price of Bitcoin. But it might go to the same market cap as Bitcoin. It's just you won't get the same pound to pound equivalent.
I know. Sash, I did hear you say a couple of really interesting things, because you said, well, okay, deflationary, and that's quite obvious. But if I hear you correctly, you also said, well, that there needs to be continuous improvement of the technology.
Yeah.
It's one. There needs to be a very solid community. And there needs to be an actual use case for it, so actual use, right? So businesses need to be building on top of it, because if all of that doesn't happen, then you can have a very fancy coin with some very fancy ideas behind it. But if the other parts of the whole ecosystem are missing, then then you're still not there. Then probably still safer to just stay in Bitcoin, I reckon.
Yeah, I think you're right. But then who are we to say what's right? Because it could have probably gone all in on Dogecoin and probably be a lot richer than that. Some of the other coins today. Meme coins seem to be doing great, and something like Dogecoin has infinite inflation. There's no hard cap, and it's just got a billionaire behind it who's willing
So,
to put it.
so let's look, bearing in mind your
ultimately
question then, Joachim, let's look at why that is so popular, and why my 16-year-old son said yesterday, oh, you should get Dogecoin. It's like, oh my God. But it's, you know, it's because there's a demand, and the demand is currently greater than the supply that is being provided. And so how do you create that sense of demand, I guess, could be a really good question. What if
well, Dogecoin is very
get...
active on TikTok, so I think that any coin should just go all out on TikTok and Instagram, maybe.
Well, I think you're right. I mean, you've got to build up that presence and fight for the attention of what is currently a relatively small crowd.
Yeah, I think it is. Attention is the big thing, and that's what's going to be so valuable in the future, is actually getting people's attention, because it's a hard resource to come by, but very valuable. And as we're seeing technologies making individuals more and more powerful and able to communicate with loads of different people from all over the world, and almost liberating individuals, where someone like Elon Musk, with however million followers he's got, he just needs to tweet Doge and everyone will just buy it. And there's lots of crypto influencers today who are doing the same thing, and they're realizing the power in building their own brand, building a load of following, and then monetizing it. And you can just do that today. You don't need to be part of a big corporation or have this big fancy job. You can just focus on what you really want to do. If people see value, they'll follow you, and then you can leverage that following to bring in an income. And
well, we see that with YouTubers, don't we, all the time now? So
kids, that's the highest percentage. As far as kids, they really want to be YouTubers when they grow up. You know, it's no longer astronauts and no longer firemen. It's YouTubers, which you know, it's great in a way, because at least it's the ability to create content, value for people, and also be self-independent. So that's got to be a positive.
Yeah, we still do need firemen and mechanics and nurses and everything else.
But all the things that our parents told us as kids to, you know, stop playing games, stop doing this and that. Today, it's those kids that did it professionally that actually are making a hell of a lot of money. And it's just because everything's going further into digitization. Through down into COVID, for YouTubers, it was a blessing, because everyone's now at home watching videos, and you know, they saw a huge revenue spike. So I think if you're in the digital world and finding ways to monetize in it, you're only going to get more strong in the way that you're going to bring in income, as long as you keep at it. And if you're in the traditional world, there's going to be some increasingly bigger threats coming in, like automation and these new technologies. But there's a need for it all. It's just recognizing the direction we're headed in.
So bearing that in mind, Sash, and everything you've talked about, that sort of links us neatly to NFTs a bit. Joachim, just remind us what NFTs are, will you? And you know, what's going on in that whole space.
Yeah, there's nothing really going on there. It's a very boring space to be in. And no, there was a really interesting example that just happened, because there was this really cool new NFT marketplace where, you know, it's all very early on, right? So artists are supposed to be able to sell their NFTs, and someone joined that network and used someone else's art and started selling it. So this is also, it shows that if you want to be able to trade your digital art and your digital assets, and NFTs are used for that as a way of selling digital pieces of art. As long as we're still in an environment where you can actually easily take someone else's art, upload it, and sell it, and still get the credit for it, or at least get the money for it, then you can see that the whole ecosystem is not yet complete. So there are solutions for that, but eventually, if you want to do it in a very serious way, you would end up in a system where anyone who can upload art would still need to do some kind of KYC, for example. Just my 2 cents, but a friendly advice to anyone who wants to avoid these kind of
so we need to attach that KYC, that individual identity, to the NFT, the non-fungible token.
Which is possible, of course. And perhaps you want to add reputation scores to the equation, so that whenever there's some bad actors that manage to get through the KYC, they might even get a negative reputation score because people see that they're actually scamming the whole
Yeah.
space.
Yeah, what you brought up there, Joachim, is so valid. And the biggest kind of, I know that people are doing tweets as well right now. They're selling tweets as NFTs, and then I think someone paid. And actually, it was maybe 1,000 plus or so for a tweet, and then the person who issued the tweet just deleted it after they made the sale. So it was kind of, what was the point? And it's just a lesson to say, do you really own it? Because an NFT in theory is the signature, and it's the scarce amount of signatures the originator's willing to publish. And with that, you get the art. But the biggest argument we're seeing online is, well, the art I can just copy and paste and it's not really scarce. There's still this inflation problem on the internet with data, and it's solving the double spend problem of data that's the real gold mine. And NFTs are a step in the direction that you can log who issued what and who they were. And I think we could think of ways in which we can make that better with something like Profile in Elastos and Vouch, where you can actually validate individuals in a decentralized way. But the real goal, and a community member called Diesel in the Elastos community, he termed it NFEs, so non-fungible executables, which is the idea of, instead of having a JPEG file which you sell a program, you sell code, and you have to, in order to open that code, you have to be the owner on the blockchain. So embedded in the actual program is your digital identity. And now, instead of opening a JPEG, I'm opening an executable file. And when I double click to open it, the first thing it does is check against the blockchain and say, well, are you the owner? And if you are, then it will open up and you can see the artwork. And that then means that someone can't just copy and paste the artwork. So if I issued 100 NFEs, non-fungible executable programs, of my artwork, and I put it out on the ecosystem, for everyone who buys it, their digital identity now has the ownership to be able to open it. And I wouldn't be able to open it myself anymore because I can't, my digital identity is no longer attached to the program. And that's the ultimate end goal. And that's really where Elastos is striving.
I think it was Wrong that coined it, wasn't it? I'm sure I saw him with a tweet. Maybe he's
Maybe, yeah, no, I'm not sure, but Diesel's been talking about it a lot, and I mean that's where we want to be going. It's not where we are right now, and we're doing a change because privacy clearly isn't still enough of an issue, or security, sorry, isn't enough of an issue, because the NFT market, as it is, selling JPEGs and the ownership is bringing in hundreds of millions. Beeple, he just sold his collection for 60+ million, might have been 70. It's wild.
So what we need is pretty much a blockchain-based media player. So a media player that can actually execute executables.
Yeah.
And that can be digital 3D art. It can be 3D any kind of printable art. 3D printable art can be movies. Can be
games.
Can be games. Can be JPEG. Can be anything. But you need a media player that can actually check the blockchain first, and then open the whatever it is.
So that actually is that's the new video recorder, or the new, whoever creates that first and then gets out.
Oh, I know someone who already built it. It's just it's pretty much ready to be used. But yeah, I mean, there needs to be some kind of business model next to it. And one of the challenges there is that, do you want to have a media player as a utility, like it runs and it's free for everyone, or do you want to have a business model to it that you build this decentralized media player?
He's doing it the second way round, so he wants to build a business model around it, because I was just about to say that the way to do that is to launch it as a free offering, and just get as many people as possible to be downloading it and using it, and then your business model actually becomes the creation of the NFE that goes with it.
Yeah, it's awesome. Yeah, great use case. Should we talk about your proposal, Chris, that you wrote recently?
Oh yeah, we might as well. Well, I mean, from our perspective, it's pretty big news, isn't it? In that, after years and months of thinking, and I think a concern after the long call that we had between the EF members and the community last week, I wrote a piece that was drafted by me and then reviewed by you both, just looking at what should happen next with the EF transition, because we were always under the impression that they would transition and it would dissolve after 3 or 3.5 years. And it was very clear last week on the call that that wasn't going to happen, and that they don't believe there is any need to dissolve. And what Feng announced during the call, I think much to Rong's chagrin, was the exact number of BTC that they hold in the EF. And so knowing that therefore there is a split between the resources that are owned by the EF and the resources that the CRC have, and the power ratio, and the problem with spending the money that EF or the tokens that the CRC has, which is, you know, not a small amount of tokens. That, you know, the CRC could have approved all the projects that have gone to them. We could be spending that ELA right now, but the, you know, understandable pressure not to release it all onto the market and turn it into fiat so that you can pay teams and developers and others. And the pressure on Elastos is a lot, or ELA is a lot greater than the pressure on BTC, particularly as BTC is, you know, rising so fast. So I was just thinking of ways in which we could just adjust the current system a bit, confirm what it is that the EF want to do and are going to do. And if they are going to transition, then I just think that that should be a really well thought through and planned event or series of events, and not just something that happens at the click of a finger. And we've got the CRC elections coming up soon, and I think people really want to, those with a time horizon that looks to the future and thinks that they're going to be, that there will be huge value in what happens in the future, will be thinking hard about whether or not they take part in the elections, whether they want to put themselves forward, how we attract new entrants into that job, and who should be doing that job and what it should consist of. I think need to understand what influence and power they're going to have. Because if it's not going to be the EF, because they are reluctant to take decisions other than infrastructure build, and it's not the CRC, then how is the community going to pull together to take decisions that are required? And at the moment, I'm not sure I can see it. So I just put forward some ideas, and the basic idea is that, which we've talked about with Donny actually from Tomb before, is to create a formal charity, so a formal entity that is recognized under the law of a country. And it doesn't really matter where it's set up, but, you know, I've said the UK because I understand how to do it here, and you can have an international charity based in the UK or regulated by the Charity Commission in the UK. And that should be given, in the proposal, it says 50% of the Bitcoin that's held by the EF. And the mandate for that charity can be anything that the EF and the CRC and the community want it to be. I mean, it's not, we don't have to make it up. It's a mandate given to the charity, but from the point that is determined, it is regulated, it is audited, it is, you know, under the eye of the law, that the trustees of that charity have to work for the benefit of the public and the mandate of the charity. So actually, I think there could be a bit of a split where the charity that is set up should be focused on education, for example, educating people about the smart web and what it is and why it should exist. And charity, it could probably be paying for things like a think tank to engage with academia and promote Elastos in all of those realms that it isn't being promoted at the moment because there aren't any incentive mechanisms. But also being a legitimate charitable organization, it would be able to accept donations too. So like every charity, one of its purposes would be to raise money for the smart web. So, you know, although it would have a pool of money, it would use that money as a leverage to then, like a really good business would, to then go and create more monies. And that can be part of charitable donations from philanthropists, or it could be by promoting and selling academic work around the smart web, for example, but also it should be focused on looking at things like marketing and branding and all of those slightly softer elements that the EF have not wanted to own, and the EF or the CRC have found really difficult to fund. But a lot of the community have been talking about it. So, could there be a third way? And I just think that is something that we should have a conversation about quickly, because there's no reason to delay the conversation. The EF, in my opinion, should have done lots of thinking already about their transition, and they should, in theory, have a plan that was ready to go for August this year. I don't believe that I don't know who's seen that plan, and it looks to me like they've put the whole thing on ice. But that does raise a few questions now about who is going to do some of these other functions that I certainly know need to occur in an organization, whether centralized or decentralized, that is going to succeed. Because when you look at the competition out there and the increasingly competitive space that we're in, I think that we will fall behind because we're not engaged with those strategic partners, all of the audiences that we can be, and providing a really clear message, SDKs for developers, all of those things that good projects should have. And I think we could fund them within that charity organization. Anyway, there's a short answer to your long question, or a long answer to your short question, one or the other.
I very much agree with you, Chris. And I think that when we look at what we've got, right, as Elastos, because in my opinion, we are all part of Elastos, and it's not just the EF or those teams who are building or the community. We're all part of it, and the things that we have are quite good, right? So we've got the DIDs, and there's still a lot of work to be done, right? And we all accept that there's still a lot of work to be done. We've got Ethereum sidechain with the potential of getting in sidechain on demand. And if you just look at those two only, then what is missing still is what actually Sasha already coined at the beginning of this talk is, an exciting community that is totally excited about these two things, which are two big achievements, right? The possibility to connect an unlimited number of sidechains with digital identity. That is one of the solutions for NFTs. That is, it offers so many new doors. But one of the challenges that we have right now is that we really need to be able to, bring back the spirit to the community from a crypto point of view. We need to have, if I hear you correctly, we need to have the opportunity to build partnerships, to build relationships, to grow the network outside of the crypto community, because the crypto community alone is just this much. And as part of that transition, so in my opinion, it's not just the plan of the transition, but it's also about, how do we bring in and showcase everything that we do in a way that that inspires people. And at the moment, the EF does not have that as their strategy, and they haven't had that for the past 3.5 years because they've been focusing on developing. They were right to do that. But the honest truth from my side is as well that they had 3.5 years to build it, and we as a community gave them 3.5 years to build it. The 3.5 years are past, and there's still a couple of blanks that should be filled, and we should point them out, and we should fill those blanks together, build a strategy to solve the problems that we're facing as well, and move forward together. And if we can get to an agreement eventually with the EF, that we build this charity together that is dedicated to those blanks, to filling those blanks, then we can really bring back Elastos under the noses of the right people and the right businesses, I think. And we should be proud of the things that we do have, obviously, as well.
Yeah, I think there's so much that Elastos has done. I mean, it's a great vision. We're not going to quite get there in the time frame that was originally predicted, but as a startup working in this sector, I think that's probably a pragmatic realization that there's just so much going on at the moment, and you just don't know what you're going to find as you try and create something new like that. But yeah, it's really important to have a legal foundation from which you can then create those strategic partnerships, and we should be all over that. And I think, heading down the academic route, but also the formal engagement with institutions like the UN and the EC, European Commission, like OECD, WEF, the World Economic Forum, is a fantastic route for us, actually. Despite the mad conspiracy theorists out there,
Yeah.
but actually the other formal routes, to get Elastos understood by those senior decision makers out there, I think is a really key piece of strategic stakeholder engagement that we're not doing yet, because the teams that are building are not equipped to do it. We haven't got a comms and marketing ability. We hire in a few people, but they don't understand Elastos as well as they could. And we've really been going down a PR route, which is public relations, as opposed to, stakeholder engagement or internal comms. That's been left to us. But the community is an amazing resource, and I just think it's slightly untapped at the moment. But there's only so much a volunteer can give.
I think that's yeah, sorry, Chris. I think that's a really valid note, because I mean, even from our perspective, we have jobs. This isn't as far as we have to earn a living and an income, and the community too, in their own right, are all working kind of citizens who are dedicating time to us. And if this year is particularly, by the end, we should see the kind of components coming together to see a working ecosystem as far as all these different elements. How do we spread the voice far and wide, and how do we get the message out? Because I'd say that the community is actually, being blunt, has just gotten smaller and smaller, and we're now at a stage where it's it's very passionate, and there's a select number of us, but actually there's only so much that they can do, and the foundation are only willing to do core infrastructure planning, but they have, in theory, they've built the smart web as they've said. There might be some bits missing, but they've managed their funds really well over the last 3 years to deliver what was the plan to deliver this year. And yet there's more money, or nearly as much as what was raised in the ICO, available today.
Yeah.
And kind of
more, I think.
What do we need the same amount of money for moving forward? And if it's just core infrastructure, can we lay out and have a roadmap to what that is and what that involves to make it worthwhile? Because from our perspective, we don't have a voice really as far as marketing. How do we spread the word far and wide about Elastos? We're just not doing it. And EF's response is, well, we're not an entity in control of that. We're a group of individuals managing a multi-sig wallet, and we just greenlight money, but we only focus on core infrastructure. Then the other thought is, well, the Cyber Republic can fund it, but the Cyber Republic has to sell uncirculating ELA into the supply, and because we haven't had a voice and we haven't made the excitement available for ELA for the price to rise, it just means by going that method, we're just bringing the price down. And Cyber Republic members and council members and the community are ELA holders, so they're disincentivized to want to sell ELA onto the marketplace, knowing that that's going to come at their own expense. And it's only made worse when they're then aware that the EF have so much funding and they're just unwilling to do it. So we've got to find this way in which there's compromise and all
be a balance
works together.
And
I agree.
One of the things that I think it's still the beauty of it is that the potential is still there. If you just look at how other EVMs are doing, for example, at the moment, and looking at Binance Chain or Hacker Chain, OKX is launching their own EVM, all focused on DeFi. I understand that, so it doesn't give a complete picture, but they're doing really good. And the benefit of Elastos, especially if you promote it as a charity, because the charity that would then have 50% of the BTC to fill all those blanks that have not been filled in the past 3.5 years. The benefit there is that a charity doesn't make money, right? So the goal of the charity is not to do a whole lot of business consulting and make a lot of money out of it. No, the goal of the charity is to make sure that the blockchains that are high in quality and are extremely cheap to use are actually going to be used. Because let's face it, there's no team building on any of the blockchains at the moment other than Tomb, but Tomb is being paid by the EF. So there's no external team building, which is fine. But it is such a benefit of building on Elastos because it's there, it's cheap, and it works fairly well. So yeah.
And that, those were the decisions that led to the paper. And actually, M. Butcher wrote a really nice short synopsis of where he thought the EF and the council were at the moment, and why the two were sort of vying against one another. And of course, you can't do that. The whole thing needs to pull together. But I think, as I said last week, it'd be so much better if we had 1,000 people all moving in the same direction, as opposed to 1,000 people all trying to do something helpful, but all, basically moving in every other direction. Yeah, and I just think it's a really good option that needs to be explored. And if they don't do it, then what is the alternative? You can't just carry on like this. If we just carry on in the same way that we have before, then we're just going to get what we always got. Because it's about, this is an existential threat, I think, at the moment. If we carry on as we are, that there is every chance that the project will either be delayed, or its success will be slowed, or it could fail. So those are real possibilities, and they are for every project. Let's not get it wrong, but this, in my view, is an analysis of risk. And what is the most risky thing that the EF could do? In my opinion, it's do nothing and carry on as they are, which appears at first glance to be the least risky thing to do. We just won't change it, it'll be fine. But actually, I think that is high risk. I think lowering the risk by transferring some of that BTC to a legal entity that is working to their mandate, but with, it takes a weight off their shoulders in many respects. They can pass that burden of outreach and communications and the administrative side of partnerships. They could pass all of that to a legal entity that can actually generate an income, provided that it goes back into supporting that ecosystem. And what I would see ultimately is that charity, a bit like any that you see, spends some on advertising, because they've got to tell people about what they're doing. But also it could act as a bit of an incubator. It could act as an organization that puts its arms around some of these small businesses that are trying to set themselves up, and really helps them grow to a point where they can start generating income, some of which could come back to the charity entirely legally. And therefore you could promote more and more of those small businesses, and then you could accelerate the adoption. Because if we delay the adoption or slow it to the point that it misses 2021, then it's going to be really hard to start trying to get that in 2022 and onwards, I think.
Yeah. Agree, totally agree.
How does as a question, how does governance work within a charity, and how would you see that, Chris?
Well, so in the UK, all charities are governed by the Charity Commission, and they have to have a set of rules that all charities follow. So one, they have to have a charitable name, they have to be registered properly, they have a charitable identity number, they're registered with the government and with other organizations. They have to have a mandate that is signed, that is for, and as Joachim was pointing out, the purpose of the charity has to be for public benefit. So, it's not allowed to be for private benefit. There's, the people running the charity should not be privately benefiting from the charity at all. It's run for global public benefit. Well, not necessarily global, it could be a small community, but I think I would see this one as a charity that has a global outlook. And so it would be presented as a charity that is running for the public benefit. And the mandate, which is up to the community and EF and CRC to create, can be anything they want it to be. It could say, well, we're going to do this or we're going to do that. And once they've decided, then they will have a fund, a trusted fund, that is that has to be regulated and has to be audited every year, and is made public every year. So you can go online and you can look through all of the minutes that are produced. You can look through all of the financials that are produced, and you can see how that charity is performing relative to other charities as well. So that, you know, how much they're spending on administration versus actually getting to the front line and doing what they've said that they would do. So it's the number of trustees, I think, is there is a minimum and there's a maximum, but I can't remember exactly what they are. But you know, Rong and Feng and others could be trustees. You know, they could be lifetime sort of hereditary trustees, and then there could be some that are voted in or some that are employed, and they have a legal obligation to ensure that the charity is performing its function in the right way, in a compliant way. So the trustees can be held accountable for the activities, but that's true of all charities, from the Lifeboat Institution to the Guide Dogs for the Blind, you name it. And some of them can grow into enormous global organizations like the Boy Scouts movement, or, you know, whatever it is. So I would, you know, I'd love to see Elastos taking the lead in that space that is, you know, it's sort of vacant at the moment. There is, you know, there's internet charities, there's the Internet Society, there's Definity, which has set itself up as a not-for-profit company. And I just think we could take a lead. You know, imagine using some of that funds to link with all of the universities like you have, Joachim. In fact, we were going to talk about that, but, you know, giving a whole load of students around the world the opportunity to understand blockchain and NFTs and how Elastos is a bit different, and how the smart web, what we could be aiming for in 5 years' time with a smart web, and why the world needs a different sort of approach. You know, it's important to know now how the internet operates and how information is shared, as it is to know about how money works. And actually, I think our education schemes is a slightly different topic, but I think they're well behind where they need to be. And Elastos could get itself on the front foot here. And, you know, it could be a globally recognized household name for the open internet. And it provides a really good route for that.
And I think we spoke a little bit about philanthropy and the opportunities that it can bring there as well.
Yeah. So, you know, we had an offer last year from one of our contacts in Canada who did actually say that they had somebody that wanted to contribute to the project, and they were asking if Elastos was registered in the States as a charity, because what they wanted was a receipt. I think it's called a 403 tax receipt, and that allows them to claim that money against tax. But because it isn't a legal entity, it's not a charity in America, they couldn't do it. So they couldn't give a gift of several $100,000 to Elastos, which is why we started having the conversation, because actually you can set up a charity in the UK that is also registered elsewhere, and therefore you can gain all of these tax benefits. But there are definitely people out there who are wanting to give money to organizations that are promoting better privacy, that are promoting decentralized ways of working, that are promoting equality for artists and people generally, you know. And Elastos ticks all of those boxes. The smart web is there for everybody. So if it is, in my opinion, if it's going to be an organization that is altruistic and is there for the benefit of the world, then there would be forming a charity around which you could coalesce all of that support and provide a legal base for philanthropic donations, I think would be, or is, essential. So if it's inevitable, then my view is you might as well get on with it. So it is inevitable that it should exist, and someone in the smart web is going to do it, whatever that is. So we might as well gain first mover advantage and get in there and do it and start it up. But what you can't do is start it up with peanuts, because then you have to employ monkeys. You know, what to do it properly is a decent amount of cash at the start to really do it properly. You know, hire people that really know what they're doing, and not just leave it to a bunch of enthusiastic amateurs, but really get decent people involved at a high level, and then we'll see a return. And that's not saying we should spend all of that BTC on them, by no means, but you need a significant war chest in order to then go out and promote some of these ideas, and you will spend some of it up front. It's a bit like building the infrastructure, but what you'll gain from that is an enormous return.
Yeah, I think, and also having a deflationary currency which is held in your chest is only going to grow. Your number for 50%, I would imagine, and this is my own speculation, that Bitcoin is going to continue to rise based off the macroeconomic situation with the monetary system and inflation down and or ramping up. So I do think Bitcoin is going to only get you more and more purchasing power, and you'll be able to pay for more goods and services as time goes on. So the real concern that is in my head is with the idea of the foundation dissolving this year, and yet they hold the equivalent of the ICO money which they raised in 2018 in Bitcoin, and we could say, it might double and it might go even further. So it's going to become bigger and bigger. It's actually a massive burden on the hands of fulfilling the promise to dissolve. And your proposition is to take 50% or to ask for 50% of it. And whether it's less or more is that's where there's conversation, or whether it even happens at all. But nonetheless, it's creating a structure which is actually can be globally recognized and can only benefit the ecosystem. And Foundation's perspective, you mentioned how it takes a lot of burden off their hands as well, and that's ultimately got to be the big question: is are we going to fulfill the promise, and are we going to continue in this direction, or will the foundation continue with the full war chest and only do core infrastructure, and likelihood gets more and more powerful as time goes on, and that wealth only be held by 5 people? And that's, to me, a bit of a concern, because really, if Bitcoin does double and if it triples or goes further, we're talking about huge sums of money that's being controlled by the very few. And we want to find a way to democratize it in a way which is, beneficial to all.
Yeah. So that point, I think, it's really valuable. And it's not because there isn't trust in those that are holding the keys to that multi-sig wallet. That's not the case at all. I completely trust that team. In fact, if I had to give Bitcoin to someone, I'd give it to Wrong, because I guarantee, I really do believe that he would give it back exactly on the moment that you asked him for it.
I'd agree.
But actually, if you were looking at this from an outsider's perspective, and if you wanted to invest seriously in Elastos or the community or ELA, then you would want to ask yourself this question: where are all the resources that are going to build this promised smart web? Are they held by the people that are building it? And what is the obligation of those who hold it to give it to those people who are building it? And actually, when you start to unpack that, what we have discovered, and what we probably knew all along, quite frankly, is that the EF have no obligation to give any of that ELA BTC to the project. Now, I think they will, but that's my faith in this. What could happen is that they just go, do you know what, we'll give up and we won't give it anymore. But I'm just slightly uneasy with that. Whereas if you take some of it and you give it to that legal entity that is charitable, and let's not forget, this is not a private company or anything. This is a charity set up to build the smart web, but focuses on all of those softer elements. Then actually, as an outside investor, you know that money is in that charity and it's going to achieve those things for you. So instantly, I think you can feel safer in your purchase of the whole, because you know that you're going to get a return, because that charity it can't just spend that money. It can't just walk away. It's got to do it for the purposes of that mandate in a legally binding way. So I think there's an incentive for investors there as well. But,
yeah. I think it's really, really interesting, Chris. And I think the most important thing is that we're pushing forward with conversation and having this. So for everyone listening, I'll put a link.
If you're still listening.
Put a link in the description, and you can read the write-up, and then also post your thoughts and share, because this is ultimately a community-driven idea. Yeah. It's there to be talked about and to be discussed, and I think it's something that has to be discussed, and we are going in the right direction with it. And what the outcome will probably be slightly different, but certainly it's hopefully one that will benefit the whole ecosystem. So yeah, I'll leave the link and put some notes in the description.
If I might add to that, because you formulated it really well, Chris. But this year has been a very interesting year for us, not just as Orchard, right, but as Elastos community, because we made some really big decisions together, right? So we decided to quite literally clean up the token model and the tokenomics, which there were some bumps there, and we cleaned it up, and we did a huge burn, and it was needed. It was needed because otherwise we would have been in a different situation altogether right now. Then as a council, but also therefore as a community, we decided to change the tokenomics by making the tokenomics deflationary, which is a very big decision, and it's not an easy one to take, right? It's not something that you just sleep over and do it. And I understand that from an EF perspective, this will be a very difficult decision as well. But it fits in line with those two other decisions that we already had to take. This is just another very big decision that we have to take, and it is exactly in line with what happened before. The risk, Chris, what you said, that if we don't do it, is quite high, and I think it's only makes the whole ecosystem, everything that we do, a lot healthier. So. I think that's what the discussion should be about. How do we make this Elastos as an ecosystem, as a foundation for a new smart web? How do we make it healthy? And how do we make it sustainable for time beyond the EF as well?
Yeah. Well said.
Yeah.
Well, we've done an hour and a half. I think that's probably enough for this week, isn't it?
Amazing. Time flying.
Then we can get on and think about what we're going to do as well, which is time consuming and busy, and our Sundays are full of it at the moment. So from my perspective, I thoroughly enjoyed having a conversation with you both again today, and really look forward to another one of these next week. Yeah,
totally. Well, yeah, it's a Sunday, it's Mother's Day, so happy Mother's Day to all those moms. Yeah. And these conversations fly by, but they're all on topics which we're passionate about, and it's just getting stuck in, isn't it? And trying to use the hive mind that is our community to come up with solutions, because I think in a decentralized system, you should be more resilient as a result. And we do have great community members and people in there who share their ideas and talk out loud, and I think that's very valuable. And we just need to listen to each other, collaborate, and think of ways in which we can improve. But yeah, no, it's been a great chat, guys, and look forward to the next one, same time next week.
Awesome. See you next week then.
Yeah, see you later. Bye.
Cheers. Bye.
Bye.